What is Cyclo?
I think the biggest thing is missed is liquidation free. Because like we got our money on Kinetic, right? And if like if you watched our video, we borrowed stables, so we don't have to worry about the fluctuation as much. But if you borrowed another token, such as another crypto that fluctuates, if there's a massive drop, we talked about it in that video that you've got to rush back and put more money into your pool. So you've got to have a very healthy factor when it comes to your borrowing. So that is so crucial to understand. Yeah, we've got a 2.9 factor, and I believe we were on the call with Crypto Eddie talking about how even when another tool had alerts, there's a possibility those alerts don't get you fast enough and you get liquidated. So I mean Whale, do you want to cover what that liquidation actually means? Because I believe you went through that, right?
Yes, briefly. So this is my collateral, this part over here. So I have $247, and then I have $80 borrowed against it. So if the price of Flare were to drop very fast and my health factor started getting closer to 1, then Kinetic needs to sell my S-Flare to be able to cover this debt, because this debt is somebody else's money. So for them to be sure that they're going to receive that money and that they can withdraw it, then this needs to liquidate. The problem is that right now, 12,500 S-Flare is 247. So right now, if it was to get liquidated, maybe it would be 3,000 or 4,000 Flare. But if the price went so down as to get liquidated, then it would mean that I would lose most of my capital here. Because then if I'm close to liquidation, then that means that the price of S-Flare is closer to this number.
Absolutely. So liquidation free, it's a very, I won't say novel. Like I don't know that any other chain has a liquidation free protocol.
Yeah, this is a very new protocol, and it's an experiment.
Yeah, it allows you to get a leverage, and you and I kind of went back and forth on the different loan versus leverage. And I think we both agreed that this is a leverage, not necessarily a loan, because you're not borrowing it from somebody else, but you're leveraging your own money.
Correct.
So it's just such a novel concept. I think people are really overlooking its value, and I really hope that this video kind of really highlights its value.
Yes. Okay. So. We will, at the end, we'll do a demo of how the actual system works. But for now, I want to talk about the ecosystem roles. So the first one, and all of this means, all of these roles means at some point minting. Maybe the trader, this one doesn't, because this would just means that you would trade the size token. But all of them, all the others means you mint, then you sell, and then you do something with it. So it will be more. It will be a little bit more clear once we do the demo of how this works. So the first one is the leverager. So this is probably what we're going to do in a little bit in the video. So this basically means that you lock your token. So in this case, it says S-Flare, but we're going to do probably size ETH. Like we're going to do it with ETH, just because we'll talk about why.
Yeah, we'll get into that why. We'll bounce
at
back
the moment
when we get to that screen.
When you lock, you're going to get the amount of tokens as if you had sold. But this token, the size token, has a price, and we can see here, we'll get more into detail here, but this is by people buying and selling. So this is pure by market dynamic. So this size token, you can sell for stables at this rate. So in this case, size ETH, 67 cents for the dollar. So if you had $100 of size tokens, you would be able to sell them for $67. Right.
So what you're saying is, if you had $100 in S-Flare and you locked it up, and we're assuming the price was 60 cents there, you're going to get, or 67 cents, you get $67 back when you sell it back.
So in this case, what it means is that you get 67 cents on the dollar.
Yeah.
So when you're here, remember, and this is Kinetic, remember how here we have $247, and I cannot take 100%. Because if I take 100%, then any kind of price swing would get me liquidated. So in this case, it works similar, that there's a limit of how much you can borrow on your total value. So not because this is not one-to-one makes it any different. Here, you would potentially be able to take somewhere between 30 and 60%, or maximum of 60% of your capital. Otherwise, your risk factor would not be good. So in those cases, it's similar. The difference is that here in Cyclo, I am not using other people's funds to take a loan, and people are not using my funds to borrow. So there's no interest pays. So if this takes you 10 years to pay back, it doesn't matter, because you're like, as long as you get the same amount of size tokens, you can unlock 100% of your S-Flare or wrapped ETH. So at some point, the leverager, what it will do is that they will buy back the size tokens, and then they unlock their S-Flare. In this case, in particular, any S-Flare that you have locked here, because it's still yours, is still having the price appreciation of the Flare delegations, the Flare drops, and the Flare staking. So if it takes 2 years to unlock, the price, the amount of tokens that you would get if you after unlocking unwrapped, like put them back into Wrap-Flare, you would have a great, much higher number of tokens than if you did before. So that's
and we're going to get into this much more detail here very shortly as we kind of walk through the demo process.
Correct. So this is one thing that you can do. So this is the most similar as just using a borrowing and lending platform, where you take a loan and then you use these funds to do something else, and then when the time is appropriate, you pay it back, and then any excess is your profit. Then you have the looper. This one.
Oh, yes.
Yeah, this is your favorite.
The one we're fixing to do. Yeah, I really like this one, actually.
So in this case, what you do is you loop it, and then you buy more, and then you mint again, and then you just repeat it and repeat it and repeat it. This is a way that you have.
Until price impact doesn't allow you to do it because of liquidity.
Of course. This is a new tool, so liquidity is a limiting factor right now. But I have faith that as the ecosystem grows, this will have enough liquidity to be able to take healthy amounts of loans.
Oh, I have no doubt. As soon as, when people realize what they're actually able to do here, it's going to change the game.
Correct. So the speculator is like if you were to buy here and sell here, you're making a profit. So this would be similar as trading a token, like any other token. It doesn't matter.
And we'll point out a very good reason why we think that's a very good position if you learn to read what's going on in the system.
Correct. So me personally, I think that right now is not necessarily the time to be buying this token because there's rewards. So right now it's more the time to be minting and dumping. But if we went to, the S-Flare, right now the prices are pretty low. And
I believe this is going to be an awesome buy.
Correct. So at some point, all of these people that have the tokens locked are going to have to unwind. So that's going to
have to show them those people. We'll have to show them those people. We're going to have to show them those people.
So
you and I are the only ones to know about them.
Well, I'll go back to the stats of how much is being used. So at some point, there's going to be upward pressure. I don't know if it's going to go to 40, to 60, to 80.
We're not here to price predict that.
Yeah. We're not to price predict, but this has kept us the bottom. So at some point, there's going to be upward pressure. So that means that you either unlock or you can.
And in my personal, I got to say, in my personal opinion, this is not, again, trying to give out financial advice in any way, but you look at, if you go to the beginning of the cycle of CYE, S-Flare real quick, where it's at, in its life cycle, how it kind of boom, and as it came down, I see the same thing kind of going on with CY-ETH right now, right? And where its beginning life cycle is, how it's holding that nice position because of the reward rates and stuff.
Yeah. So the whole idea with Cyclo is that when people, like when the prices are high, it encourages people to take loans and then sell. So that means that they mint and then they dump. So that creates downward pressure. And then when the prices are low or when people need to deleverage, then creates upward pressure. So for example, I
was going to say, for example, like right now, if I had $100, I would only get $23 back on that leverage position at 23 cents.
Sure, right? But if you had $100, you would get almost 100 tokens or 500 tokens with only 100. So right now, what this is doing, the system is encouraging people to buy so they can unwind. And when the prices are up, it is encouraging people to mint and dump.
Right, that's what I was saying. This is not a price point that, in my mind, is a good price point to lock up the S-Flare at, because you're only going to get 20 cents on the dollar. I mean, you could go to Kinetic and get 40 cents on the dollar and still be well within, less than a 2.0 health factor. So 20 cents on the dollar is really not a good lockup position. But you get over that 50 cents a dollar, that's a better position than say the 20 cents for sure.
Correct. So right now there's incentives for holding. So people that are just buying and holding, they get incentives here on Cyclo. So that's why the prices are a little bit higher. But at some point, from the people that have already minted and they're already in the
actually, you see all those red downs? Those are me looping.
Oh, cool.
every one of those is me looping CYE.
Right. So Steven dumps, and then there's a upward pressure again.
Well, I don't. If you call it a dump, I mean, is that what you call it? Because like what I loop it, so I buy it, I mint it, and I guess then I dump it. And then I mint it again, then I dump it, and I mint it again. So I guess it is a dump. Yeah. I mean, that's even the language that they use somewhere here in the documentation. Like you dump the size token, and then you exchange it for a stable coin or for another crypto. So like I said, this is a lot. This whole thing might take years to actually go through the whole cycle. And there's going to be times where, like, if the prices of crypto start going up again, you're going to see people trying to deleverage because now they want access to their S-Flare. So that's going to create upward pressure here. Yeah, it definitely will, which we'll show you shortly.
And then the next one is the market maker, that it's providing liquidity and then allowing both trades to happen. For this,
I'm sure you like that one.
I like this one. Make sure you understand what LP and impermanent loss is doing for you. So same. I think that there's going to be times to enter the liquidity pools and there's times to just not. So for example, I have liquidity from 34 to 24 cents. So my entry point is around 33, 34. So ideally we are ranging in this price range for a while. And then if we keep dropping, then I might exit and then keep the tokens. And if we start going back up, then that's going to be my price range for as an impermanent loss. So
I did that with CYETH, where my entry point was actually 65 cents. So right now I'm actually 100% into USDC. But as the price comes down, my low cap is like 20 cents. So this way, as it's going down, I'm actually swapping out the USDC for CYETH that I can then use to either unlock my tokens, which I locked up at a much higher price point, or sit on it and wait for it to come back up and sell it back.
Correct. So same thing. Like this doesn't mean that you should be doing any of these ones, but you understanding that these tools happen, or that these tools exist, it's going to allow you to use them whenever it's appropriate. For me, like I said here, there wasn't enough liquidity for me to completely buy. So instead of waiting, I just decided to enter the liquidity pool. I've been making fees all along. And then if I decided to exit, then I already have a whole bunch of Cyclo tokens. And then maybe I'll wait it out. I haven't decided yet what am I going to do. I think I'm going to leave it there for a while. And I'm in a rush to unlock my tokens. I'm not paying interest. So it's like, if it takes me longer to unlock, then so be it. It's fine. Cool. All right. So with the tip jar wallet, here it is. I say, why don't we buy maybe $30 or $40 of ETH?
Yeah.
And then we do the whole thing and we show them how it's how the process works. What do you think?
Yeah, that works for me.
So in the previous video, remember that we bought some S-Flare tokens and some ETH tokens to be holding here on Cyclo. So the only problem that I see about doing this, and I remember now, is that if we dump, we might not be eligible for this.
Yeah, we probably wouldn't be eligible for that.
So, but we still have the S-Flare, so that's fine. I think that's fine. Yeah.
Yeah, I mean, the content's more important than those rewards.
Correct.
So
okay.
we're it's more important to me to get this, show this stuff. So I mean, I'm fine with it. And maybe what we do is, here's what we may consider doing then, is selling those CYE tokens and flip them over to S-Flare tokens. Because again, we both, when we go further down this video, think the S-Flare is going to go up eventually. So those tokens will pay for themselves very easily.
Correct. Okay, sounds good, man. So then the first thing we have to do is go to Spartex AI. We're going to swap 2,500 wrap layer for 0.02 ETH. Swap, confirm. I'm going to sign in my wallet.
Almost like 4-cent gain there.
So then we're going to go to Cyclo. I want to choose wrapped ETH.
Before we start, let's take one quick look at the price of ETH and then the price of Cyclo, or ETH and Cyclo, because we want to have a good note there. So, which it's also reported on the Cyclo site.
Yeah, it's here. Yeah, we got it here. So
1931.
So this is the price. Yes. So now that we're here, this is the FTSO price of ETH, right?
Yep.
So if I multiply 0.019385 times this number or divide it, that means that the cost of, like, the amount of money that I'm locking is the equivalent of 37.44 ETH.
CYETH.
Okay, so no, let me put it different. If I were to sell this amount of ETH, I would get 37.44 USDC.
Yes.
So this is the amount of tokens that I'm locking. This is what I was explaining earlier, and it's easier to show here. So what I'm going to do is I'm going to press lock. Make sure you read this before you agree. I've already read it. That's why I'm just going to skip it. So I'm going to approve signing and locking. First, you approve, and then you sign. Cool. Okay, so now I got here success. That means that it worked. So then if I go here and then press size ETH.
No, let's loop it. Leave it on ETH.
Oh, you want to buy more ETH?
Yeah, and loop it, and then go back and loop it down.
Sure.
Well, we'll see the price drop that way too. So this is what
how many tokens do we get? 37.44, because we already held some. 37.44.
I didn't realize we still had some.
So you see right now, 37.44 size ETH gives me 24.76.
We started with $30, $34.
$37, yes.
$37.
So that means that I'm getting 67 cents per each, because this is almost as if it was a stable coin. It's just that stable coin is not pegged 1-to-1. this, because of the market dynamics, this is the amount of money that we get. So in this case, you're saying to buy more ETH and then do it again?
Yeah, loop it down.
Okay, cool.
So then go back and
okay. So in this case, 37.44 are giving me 1.012. So you saw I'm getting less ETH than I initially got. Cool. So then if I go here and I press max, now the amount that we swapped here becomes available. So this will be worth $25 of ETH. So here, this is my transaction. Yeah.
Yep.
So 37 wrapped or size ETH for $25. And then right now, if I go back here, this 25 size ETH would give me 650 in stables. Okay.
Yep.
So I would say that, like, we already showed the process, so we don't have to loop it indefinitely. Okay, so now we're going to swap size ETH for USDC. Okay, so now I have $16 here. Okay, so let's go to app size flare. So okay, so now that we did this locking and we show you how it works, let's talk a little bit about the stats. So there's $500,000 locked on Cyclo. This is the lock price right now. This is the S-Flare price. This is the current size flare price, which is 23 cents on a dollar. This is the 69 for the size ETH that we talked about earlier. The total size flare supply is 500,000. So yeah.
Yep.
And then the total value locked here, we can see that is 19 million S-Flare. And we have 31 ETH locked. So there's, yeah, like $400,000 of S-Flare and $60,000 of ETH. So this is such an early market. Like in any way that you see it, this is such an early market.
So here's the thing that we were kind of talking about earlier, like, buying up, we were mentioning buying up some size flare, sys flare, right? The sys flare. So for anybody who would like, if you're like, long-term thinking, you're like, oh, you look at this, you go, man, there's, would you say $500,000 locked up? $400,000. If S-Flare dramatically increased, it would behoove a lot of those people, especially if they locked up a lower price point, to go ahead and unlock it and use it in other places in DeFi. So as they buy up those S-Flare tokens, which the liquidity is super low, last we checked was like $400 or $500. That means the moment they buy up, $300 worth, it's going to drive that S-Flare token from 20 cents to, 50 cents. So anybody who bought up now at 20 cents will be able to sell it at a higher price point. So that's that other part where you have the trader person who's buying it low, waiting for people who want to sell it so they can sell it high. So there's two reasons that the token would go, up or down. It's going to go down when somebody wants to take a loan out and push it down. And then there's when somebody wants to unwrap their loan, it's going to push it up. And the thing about it is there you will have short-term investors such as myself who go, all right, the price of CYETH is at 70 cents. So I'm going to store up as much as I can at the 70 cents mark, knowing it's going to come down. And as it comes down, I'm going to start unwrapping it, which is also going to drive the price further down. So then people can buy it up and then move it back up. But also that other part of the equation, let's look at S-Flare, because it's so cheap right now, 0.01 cents. Well, if it gets to, say, again, just throwing out a magical number, $1, people aren't going to just let that money sit there. They're going to go leverage it and do more with it. So they will start selling it, even if it's, different, even if the price point was higher than when they locked it up, because the reward is that they're going to lock a lot of money of S-Flare for such a ridiculously low price anyways. So they're going to drive that price up. So there's so many mechanisms to drive the price up and down, that there's tons of opportunity for people to arbitrage as this system grows and evolves.
Correct. Okay, so now, as you can see, we are not eligible for size ETH rewards because we have minted more than what we bought. Like, we already spent this, and I think we were at 62 when we bought. So we already made like 5 cents on each size flare or size ETH. I need to confirm, but I think we bought a little bit lower. So then that's doing the trading part. So to unlock, we have 22.27 size ETH. I don't have to have 100%, you'll see. I'll press unlock, press max, and then unlock.
Oh, so I didn't know this. Hold up. You can unlock part of the part of it, not all of it?
Of course.
That was something new to me.
So you see we had 24.94 locked, and now you'll see this number dismiss. So now I only need 2.67.
I learned something new today. I thought you had to have all of that to unlock it. I didn't know you could do partial. That's cool. Right.
Okay, so now that we have some ETH, why not? Let's supply it here, just so it's not sitting in our wallet. So we skipped the part of dinero of staking my ETH just to make it shorter, but here it is. I got this part, approve and supply.
Oh, Flare's up, or ETH is up another 3 points too. So
cool. Okay, and then the last thing we're gonna do, we're gonna use this USDC. I'm gonna check what's the percentage. So I have 25% on USDC. So then I go to swap. So what's 25% of? So that would be 4. So that means we need to swap 12 to CUSDX. And then I go to pool. You have to press add. If I were to set it up through here, I would open a new pool. So here I want to add it.
I've done that a time or two.
And then add liquidity. Sign, confirm. And then by doing this, what we're achieving is that we have $20 that if this price were to go down, then we don't care about the price of ETH to buy back. So in my opinion and my experience, this works better with stables in the short term. If you don't mind about the long term, then it doesn't matter. But in the short term, I feel like this is much more predictable with stables than with crypto.
Yep. And as you can see, it was at 70 cents earlier when we were first talking, and with our wrapping and everything, it's down to 64 cents now for CYETH.
67.
67. So it's down 3 cents.
Yeah. So for example, if I go in terms of USDC, the price has dropped a lot. But if you go into in terms of Rappler, it has pretty much stayed between 15 and 20. So even though the price of Flare has been going down, the ratio has been pretty stable. So this is harder to predict and to do the actual conversion because it's two variables that you have, the price of Flare and the price of size Flare.
AI will help us out down the road. Don't worry.
I like the idea of having some in stables, and then we can have that liquidity to unlock at any time. All right, guys, that was the 3rd episode of TipJar Wallet series. And I hope you liked, and leave us any questions you have in the comments. I hope this wasn't too long.
Yeah, it'll be fine. Don't worry.
All right, cool. All right, guys, until next time.